Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at IMVT, or Immunovant Inc. IMVT is a clinical stage biopharmaceutical company that develops monoclonal antibodies for the treatment of autoimmune diseases. Here's the barchart.com technical opinion rating for IMVT. The bar chart rating is a 100% buy with a strengthening short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. The market is approaching overbought territory. Be watchful of a trend reversal. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that IMVT has been above the moving average line for over a year, so the monthly trend in IMVT is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The chart shows that the blue line has been above the green line since the chart started in March, so the daily trend in IMVT is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. IMVT is below the upper Keltner channel line, so IMVT is inside the buy zone. Since the trend is up, we want to buy a call. IMVT has plenty of option chains to choose from. We're going to use the January 19 option chain. Right now, the Jan 19 options have 33 days to expiration. Here's most of the IMVT option chain for January 19. IMVT closed at 42.74 on Friday. That means any calls on the list from 25 to 40 are in the money. Let's take a look at the profit potential for purchasing the IMVT January 19 45 strike call, which is the closest active strike to the current price of the stock. The bid-ask spread for the 45 call is 190 to 215. We tried to enter at the midpoint, so we'll use 205 as the buy price. Our call option calculator shows the profit potential for this call based on IMVT price changes at option expiration from flat to a 12.5% increase in price. We can see that if the IMVT stock price is flat at 42.74 at option expiration, the 45 call will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock price only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 40 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 40 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the IMVT stock price is up 1%, the 30 call will lose 49.1% of its value. We want that to be break even or better, so the 40 call does not meet our requirements. Let's see if the 30 call will work. The bid-ask spread for the 30 call is 1270 to 1360. We try to enter at the midpoint, so we'll use 1315 as the buy price. The 30 call works. If the IMVT stock price is up 1%, the 30 call will make a 0.1% or $2 profit. That's better than break even, so the 30 call is the one we'll buy. The call option purchase calculator also shows that if the IMVT stock price increases by 2.5%, the 30 call will make a 5% or $66 profit. If the IMVT stock price increases by 5%, The 30 call will make a 13.1% or $173 profit. If the IMVT stock price increases by 7.5%, the 30 call will make a 21.3% or $280 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the IMVT stock price does not make the expected move up and remains flat at expiration, the 30 call would only lose minus 3.1% or minus $41 compared to the 100% or $205 loss for the 45 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the IMVT January 19 35 strike call and sell to open the IMVT January 19 40 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 35 call for $8.25 and sell the 40 call for $4.75. $8.25 minus $4.75 equals $3.50. So the entry price or debit cost for the spread is $350. The call option spread analysis calculator picture shows that the spread will make a 42.9% or $150 profit if the IMVT stock price declines by 5%, remains flat, or increases in price when the options expire. If IMVT is down 7.5% at expiration, the trade will make 29.6% or $103. Creating the debit spread will allow us to collect a $475 cash credit to our brokerage account for the sale of the 35 call. Of the 40 call. As we said on the previous slide, this reduces the cost of entering the spread to $350. Here's a note regarding earnings reports. The next IMVT earnings report is scheduled for February 8th. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the IMVT January 19 30 strike call for $13.15. We also reviewed a spread. The spread said to buy to open the IMVT January 19 35 strike call and sell to open the IMVT January 19 40 strike call at a debit of $350. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.